Hello everyone, welcome to my channel again. Today I want to share my research on Groq Inc, an AI chip company that could become a major player in the next phase of the AI infrastructure. So let's get into it. Groq was founded by Jonathan Ross, one of the key architects behind Google's first AI chip, the TPU. His goal with Groq was simple: build a processor that runs AI models faster and more predictably than anything else on the market. So Groq builds a special type of AI chip called the LPU, Language Processing Unit, designed specifically for AI inference. And to explain a bit about what inference is, when it comes to the AI process, there are two phases. One is the training phase, and the other is the inference phase. Training is when the AI model learns. That's incredibly slow and compute intensive. Inference is when AI is actually used, such as responding to a question, analyzing a sensor in the car, or making a real-time decision. In other words, training is teaching the AI, inference is using the AI. And as AI moves from labs into the real world, like phones, cars, customer support, autonomous systems, inference becomes where most of the ongoing demand and the revenue will come from. And that is the part of the market Groq is focused on. What makes Groq different is that their chips are built for speed and consistency. With Nvidia's GPUs, performance can fluctuate depending on what else the AI chip is working on. In contrast, Groq's LPU is designed to work like clockwork. Same results, same time, every time, which is crucial when milliseconds matter, like in autonomous driving, live trading systems, or instant language translation. So Groq isn't trying to replace Nvidia in training giant AI models. Instead, it's capturing the market for running those models, and that is the AI inference market, which is one of the fastest growing segments of AI, and we'll have a look at the market estimate numbers later on. Independent tests have shown that Groq's chips can generate responses at hundreds of tokens per second, while typical GPU setups for similar models often hit just tens of tokens per second under the same conditions. Of course, it depends on how you test, model size, batch settings, everything. But even allowing for that, Groq's real-time performance is genuinely impressive. Groq's architecture offers a meaningful speed advantage in latency-sensitive tasks, and that could open entire new market segments for them. High-end Nvidia GPUs burn a lot of energy and generate massive amount of heat. Most require liquid-cooled data centers, which are high in cost and limited in availability. Groq's LPUs, by contrast, use less power per inference, generate significantly less heat, and can run in standard air-cooled data centers. According to Groq's own white paper, their LPU architecture is up to 10 times more energy efficient than GPUs. One independent reviewer put that energy efficiency advantage at about 80 to 90%. Less power per inference means lower energy bills, less cooling infrastructure, and a much easier path to scaling globally. That's why I view the cooling and deployment flexibility as a real competitive edge, especially considering data centers around the world are running out of power and cooling capacity, and upgrading to water cooling system can cost hundreds of millions of dollars. Businesses can also deploy Groq faster and cheaper, and in more locations. That could really be a make or break scalability advantage as AI demand keeps exploding. In the meantime, institutional money is piling in. In August 2024, Groq raised $640 million in funding, which implied a post-money valuation at $2.8 billion, following which Groq raised another funding round of $750 million in September 2025, which pushed its post-money valuation up to $6.9 billion. And these funding rounds involved big major players like BlackRock, Samsung, Cisco, and Disruptive, which shows that it's serious institutional interest from long-term professional investors. Even as a private company, there are strong signals of traction in terms of its revenue. In 2024, Groq's revenue estimate was between $90 to $170 million. In 2025, there is the potential of $500 million tied to major infrastructure deals, including a $1.5 billion commitment from Saudi Arabia. This indicates that Groq is scaling and selling its products. As AI applications move from development to deployment, the inference market becomes the revenue driver. Industry estimates indicate that the global AI inference market could reach $250 billion in 2030. If Groq just capture 0.5% of that market, it would translate to a revenue of $1.3 billion per year. Similarly, 1% of the market would translate to $2.5 billion in annual revenue. 5% would mean $12 billion, and 10% would mean $25 billion. Those are not small numbers. Of course, that's hypothetical, but it shows the scale of what's possible. Even a single-digit share of the AI inference market would put Groq among the major AI hardware players. As an investor, Groq is exactly the kind of company I want some exposure to. It's run by a founder with proven chip design experience. It has a unique technological moat where others struggle. It is generating real revenue with serious investors backing it up. It is also positioned in the fastest growing part of the AI value chain. On the other hand, it's still private, competition is fierce, and its valuation is already high. So this is really a high risk, high reward play. But in my view, the potential upside does warrant at least a small allocation. So that's how I'm evaluating Groq today. A smaller, smarter bet, but one with potentially giant payoff if it executes. If you found this helpful, hit like and subscribe and share this video with anybody who might find it interesting or useful. It really helps me grow my channel. If you have any comments or questions or your own opinion about Groq, please feel free to leave a comment down below. I would be delighted to hear what you think and interact with you over there. See you next time.